Hello, this is Jordan. This video is being recorded on Friday, October 14th, 2022. Thanks so much for joining me. This is the gold and silver weekly wrap-up, and I don't want this to be too long. Getting into it this week, very rough week for precious metals. We had gold down $60 on the week, 3.5%. Silver lost 10%, and the S&P was only down, I believe, 1.5%. So unlike 2 or 3 weeks ago, where we were seeing the S&P start to lose its 40-month moving average, precious metals were holding up better. They were performing better. There was that 1 week, 2 or 3 weeks ago, where the S&P, there was a big divergence. Precious metals are way up. The S&P was down. So we kind of saw a different thing this week. The S&P didn't diverge completely, but again, only down 1.5%. Gold was down $60. Silver down 10%. So rough week. And so what we're seeing here on the charts here, we have the gold daily and the silver daily there. And clearly the bears continue to have control. If you look at the weekly chart, the gold rally looks like it back tested 1675. Now it's coming off. So to me, the next really strong support level that I'm looking at is around 1560. You can see it there. That's the 50% retracement from the low, from the 2016 low to the 2020 high. So that's definitely a level to keep in mind. And obviously we have to look at sentiment. Sentiment 2 or 3 weeks ago, it was fairly extreme, but it wasn't extreme enough. If you look at the net spec position, 3 weeks ago or so, it was 13.6% of open interest. Again, I keep saying this. That was down basically at zero at the 2016 bottom and the 2018 bottom. So maybe we will see the net spec position come down close to zero as gold gets there into the mid 1500s. There's really strong support there. You can look at a weekly or a monthly chart going back 15 years. You can see it. You can draw the horizontal line. So you have that. And then at the same time, you have, the potential for the Fed stopping its hikes. That's really coming up. Don't forget about that potential. So we have the November meeting and then the December meeting. So I think I just don't, and I've been wrong about this, but I really don't see how they're going to be able to hike into next year. Maybe they can get that December hike off, but realistically, they're basically at the end of the cycle. And right now, we're less than a month from now, they're already going to have rates at 4%, and then you have the December meeting. So, like we always say, financial markets, they look ahead, they anticipate, they digest things in advance. And so potentially in the coming weeks, if we see gold come down to that really strong support, and then you see the net spec position come down really close to zero, plus we're at a point where the Fed's going to be really close to being done, if not already done, boom. That's what sets up a really big rebound. So people tend to get, really bearish at the wrong time, but this is not the time to be really bearish. We're going to be, in my opinion, closing in on the bottom. Now, what does that mean for silver? We see gold is if you look at the bottom there, it's tough to see. Gold's been outperforming silver since the end of September. Silver was outperforming in September. I haven't looked at the silver COT, but if you look at the most bullish COT for silver, I believe that was in early 2018. So that was before the bottom in 2018. So in the last couple months, we've seen the huge short interest. We've seen the net spec position come down to where the speculators were actually net long, the second most bullish position ever. So just because that didn't produce the start of a bull market or a massive rally, that doesn't mean that is no longer meaningful. The sentiment in silver is still going to be really, really bullish from a contrary standpoint. And, I've talked about it in the last couple months. Around $15, that's really, really strong support. And so, silver closed at 18, so $3. That still seems like a lot. That would be painful. But if we see gold come down another $100 or so, where is silver going to come down to, especially if it's underperforming? So have to keep that in mind. Now, looking at the stocks, I was hopeful that we could rally to those thick red lines. GDX, could that rally up near 28? GDXJ, could that rally up to 25? But all that happened, as you can see, is if you look at the September peak. So if you're looking at GDX and you're looking at GDXJ, look at those September peaks. They're right in line with the October peak. So that's what happened on that rally. You see GDX September peak was around 26, October peak right around 26, a little bit higher. GDXJ, the September peak was at 32.5. That's where the peak was 2 weeks ago or so. SIL, silver stocks, they actually rallied above the September peak, but nevertheless, you can see 27 is pretty stiff support. So SIL came pretty close to that. Obviously, looking at the potential for a double bottom here. It doesn't have to double bottom. I mean, it can make a lower low, which becomes a false lower low at some point. There's other things that obviously we have to look at here. You're not seeing this in the charts. Look at long-term 10, 15-year charts. See where the key levels are. For example, I think for GDX, we're looking at $19 or $20. GDXJ, we're looking at 24, 25. There's an open gap, I think, at 24. So those are some long-term support levels that I've been looking at. And at the same time, you have to look at breadth indicators, because in the last couple weeks, there's been a lot of positive divergences in the mining stocks. And that doesn't mean they're going to immediately bottom the next week or next month. But if you have these positive divergences, they're a really good sign. That just tells us the internals of the market are strengthening, which is much different compared to the selling and the declines that we've seen all year, and especially in recent months. So the internals are strengthening for the miners, but that doesn't preclude another 10 or 15% downside here, or them making a new low, because obviously in the near term, I mean, the narrative from this week, in the very short term, the narrative is inflation is still high. The Fed's going to have to hike to 5%. And so that's bad for precious metals. And, maybe there was less news this week about, the economy going into recession. So because of that, maybe that's why the stock market held up better. And that's why precious metals really took it on the chin. I mean, I didn't look at the rest of the sector, but we know energy has been showing some strength. I mean, the rest of the commodity sector, So I think that explains the current short-term weakness. But again, if we think about the setup for the next couple months, we're coming into the strong potential for a major, major bottom here over the next month or two. So, I'm not just trying to put a silver lining on it, but I that's what I really see when we're looking at sentiment indicators. We're looking at technical support on gold. We're looking at the long-term support levels on GDX and GDXJ. And again, those divergences, I haven't updated all my data. I'll have that for subscribers this weekend. The GDX advanced decline line, that already bottomed. That's showing a positive divergence. So if these divergences continue to hold up into November, I think that's going to be a really good sign for this market putting in a low by the end of the year. So I like how things are setting up over the next month or two, but not necessarily over the next couple weeks. There is the risk of more declines in the very short term. That's all for this video. Let me know what you think in the comments below. Hope everybody has a great weekend. Talk to you guys next week.